I was looking at some financial news and came across this Capital Infra Trust IPO or InvIT, actually. It's quite a mouthful, isn't it?
Well, yeah, it is a bit of a tongue twister, but an InvIT is a infrastructure investment trust is actually a pretty interesting concept. It's a way to invest in infrastructure projects like roads and highways. So it's a bit like a mutual fund, but specifically for infrastructure.
hmm Okay, that makes sense. So this Capital Infra Trust, it's not a company exactly, it's more like a trust, right? That's what I'm gathering from the documents.
Exactly. It's registered with SEBI as an InvIT, and it's structured to manage a portfolio of infrastructure assets through special purpose vehicles or SPVs. It's kind of like how a holding company operates with various subsidiaries for different projects, just structured differently for tax and investment purposes.
Okay, that's helpful. So each of these SPVs, they are like independent entities.
Precisely. Each operational highway project functions as its own entity within the InvIT. This, I guess, isolates financial risk for each project, and that protects investor assets by keeping the money flow separate, which is pretty smart.
Yeah, that does sound smart. So looking at this, they've got a bunch of road projects, right? It says 26 in hybrid annuity mode with NHAI.
Yeah, and it looks like 11 of those projects are already completed, including 5 that they acquired from Satpav Infrastructure, and the other 15 are still under construction. So there's a mix of established and developing assets, which is actually a good thing for potential returns and diversification, I'd say.
Got it. So it's not just like brand new ventures, it's a mix, which feels less risky, I guess. Now, this IPO, it opens January 7th, right? And it's priced between 99 and 100 rupees per share, I see.
Correct. And the minimum lot size for an application is 150 units. So retail investors would need a minimum investment of about 15,000 rupees. It's a book built issue, by the way, which means the final price will depend on investor demand during the IPO period, which is from the 7th to the 9th, I believe.
Right, a book built issue. That's helpful to know. So, what's the money they raise? The IPO proceeds. What's that going towards?
Well, primarily, it seems like the proceeds will be used to provide loans to those project SPVs. They need to repay or prepay their external borrowings from financial lenders and also repay unsecured loans they've taken from the sponsor. So it's basically a debt repayment and restructuring move.
Okay, so it's more about stabilizing the finances of these projects rather than funding new ones directly right now. Now, who's behind this? The sponsor company, Gawar Construction, I see.
Yes, Gawar Construction is the sponsor, and they're pretty experienced in road and highway construction across India, having worked with various government bodies like NHAI and MORTH. They've done over 100 road projects since 2008. So that adds a bit of confidence, right?
I guess that experience does add some weight, when you're looking at something like this. Now, they say the portfolio has like 682 kilometers of assets. Does that actually mean anything significant?
It definitely does. That's the total length of the road infrastructure that the InvIT is looking to manage. It gives you an idea of the scale of the operations and the potential revenue generating capacity. The portfolio spans 7 states, so it's geographically diversified, which reduces regional risks, right?
Right. Geographical diversification is good, makes sense. I see the revenue took a bit of a dip from 2023 to 2024 and profit too. Does that raise any concerns?
Well, that's something to consider for sure. The revenue declined from 2,033 crore rupees to 1,485 crore rupees, and the profit fell from 497.2 crore rupees to 125.8 crore rupees. It's important to understand why, but overall, it could just mean the projects are going through some changes or initial operational adjustments.
Okay, so it might not be a long-term concern necessarily, just needs deeper digging, I guess. Now, what's the deal with this weighted average residual concession period? I mean, 11.7 years. What's the significance of that?
It basically means that on average, the projects in their portfolio have about 11.7 years left on their concession agreements. This is important because it gives investors a sense of how long these projects will continue generating revenue. It's kind of like knowing how much time is left on a lease for a rental property.
Okay, that's a good analogy. It's good to know there's a long term view. What about these lead managers? SBI Capital Markets and HDFC Bank are the ones handling the issue, right?
Yes, those are the book running lead managers, which means they're responsible for managing the IPO process and ensuring that everything runs smoothly. They're both pretty well established names in the financial sector, which adds credibility to the whole process, right?
Yeah, that's reassuring. I was looking at the timeline too. The allotment also they expect will be finalized on January 10th, and the tentative listing date is January 14th.
Exactly. So if you apply for the IPO, you can expect to see the shares credited to your demat account, and they'll start trading on the BSE and NSE around that time. It's a fairly standard process, although the actual listing date is tentative, like it often is with these IPOs.
Right, and these shares they'll be listed on the BSE and NSE, so easily traded on the exchanges. That's also helpful. So the offer, is it just for like regular investors or what?
It's actually for both institutional and non-institutional investors. It seems like the offer is structured with 75% of the shares available for qualified institutional buyers, and the remaining 25% is for non-institutional investors or high net worth individuals. So I guess there are different levels of investors and investment.
Yeah, it's not just a free for all, it's structured. Now, this InvIT structure, I mean, I get the benefits, but are there any risks we should keep in mind?
Well, like any investment, there are risks. The success of the InvIT depends on the operational performance of its road projects. Changes in government regulations, maintenance costs, and economic conditions can also impact profitability. There's also interest rate risk and market risk. So, not a free ride.
Yeah, that's very true. Like a change in traffic volume could affect their income or something like that. So, not foolproof. So, after all this info, what do you think about this?
Well, the InvIT structure offers a good balance between diversification and project level control. It's an interesting option for investors looking for exposure to infrastructure assets. There's a lot of potential for long term rewards, but you'd need to do more research and align it with your risk appetite. So, no jumping in blindly, I'd say.
That's a fair assessment. So, it's got potential, but also risks like anything else. It does seem like they're using the funds for debt repayment, which seems cautious, and that's reassuring, I suppose.
Yes, and the fact that they're focused on existing revenue generating assets rather than entirely new projects is a plus. Plus, their sponsor has a solid track record. I mean, it seems like there is some foundation to this.
Right. And this geographic diversity helps mitigate risk as well. Now, with this like weighted average residual concession period of almost 12 years, I mean, that gives you a sense of stability, right?
Yeah, that definitely gives you a sense of the potential long term income stream. And also the fact that they're acquiring 100% stake in each of the project SPVs from the sponsor means that they'll have full ownership and control over the revenue and operations.
That does provide greater control and makes it more streamlined. So it's not just a blind investment into random projects, there's a structure to it and some thought, it seems.
Absolutely. And that's what makes InvITs like this a bit different from regular stocks or mutual funds, right? It's a focused investment in a very specific asset class, which can be good if you know your risk and invest wisely.
Yeah, it's like a specialized investment, like a niche, I guess. So, with that all in mind and this long term view, it seems like there's a lot to dig into here.
Exactly. It's one of those investments where it's not just a matter of buying and forgetting. You have to actively look at their performance and market conditions and how the infrastructure sector is performing as a whole. It's dynamic.
Okay, so definitely not a passive investment then. It needs some attention and constant review. Makes sense. It's a very interesting way to look at infrastructure investment, though, I must say.
Yeah, it is. It's taking the concept of investing in hard assets and making it more accessible to a wider range of investors, so long as they're willing to understand the risks involved. It definitely requires more research and understanding to actually gain any good results.
So, for a well informed investor, this could be a potentially good option, but definitely not for everyone, it seems.
Precisely. It offers dividend distribution potential, partial redemption options, and also capital appreciation in the long run. But yeah, it's important to understand the details before jumping in. So, definitely not a get rich quick scheme, I'd say.
Agreed. It's more about long term growth and stability rather than quick gains. And it definitely needs some time and consideration. Thanks for breaking it down. It was really helpful, Ayana.
You're welcome. It's a fascinating area, and there are more InvITs coming to the market. So, it's good to understand the basics of how it all works and what to look out for. So, what are you thinking? Might look into it deeper?